Go ahead and make all that happen. Let's see, still getting booted up over on my end. Just want to make sure everybody's copacetic. How is everybody doing today? Everybody good? I know this price action is crazy, isn't it? But that's exactly what we was hoping for. We wanted to see some movement, man. All this dead stuff that was going down wasn't good enough. We need to see some real movement. Hopefully you guys are seeing the power of the pulse waves for shizzle. As you see that, like I was explaining to you guys all along, you know, the system does lead the market generally 3 to 5 days out. And it wasn't, you know, out of the norm that yesterday was Wednesday, and then we saw the play out of the crash alerts, which was the third day. Again, 3 days out, right? So, I mean, you can't make this stuff up. It just is what it is. And I'm very thankful for that. I really am. For the most part, you have to be mindful of what you're looking at most of the time. You know what I'm saying? These tools, exactly what they are. They're tools. There's no such thing as a perfect, you know, system or market timing tool per se. There's no such thing as anything perfect. Nothing's going to flow perfectly. It just doesn't work that way. But what you can do, what you can have, is something to alert you as to the status of things that are transpiring around you. And that's what the algorithms do. You know, their job is to point us in the right direction and let us know what may be about to take place, as well as what is currently taking place. So that is what this is all about at the end of the day. And we seek to maximize all the tools that we have at our disposal. So you have to look at all sides of things. It's funny because I'm going back and I'm looking at some of the stuff here. And, you know, just a few trading sessions ago, we had these 39 showing up on the on the Dow Jones Industrial Average, especially on the cash index. For those of you who are new and you're still working your way through the tutorials, you've heard me say, or you will hear me say a lot, that the cash markets, the equity side of things, are more evenly priced than futures. Futures and forex can be quite noisy at times, most of the time, majority of the time, whereas your equities are just better priced. They're calmer for the most part. And you can get a more even distribution of data as well. The data is usually cleaner. With futures and forex, you know, because of the trading, you know, the 24 hours a day trading, you can have this messy spikes, you know, up or down, and it's kind of crazy. So it can be difficult to manage those at times. So that's why I really like the equity side of things. Most of the time I like to follow that. All right, so today it is Thursday, May the 18th, 2017. Right now we're well into the trading day. We've just completed the first hour of trading. It's 10:36 a.m. Eastern Standard Time. Those of you who are familiar with the 2-bar Charlie 60-minute setup rule, that time has now expired, and you should now know if you're going to do something, what you're going to do and how you're going to do it. We did have some 2-bar Charlie setups during yesterday's washout. Today we should get one more day of possible downside before we get a take back Friday tomorrow. If we get a take back Friday tomorrow, that shows a V-shaped recovery. in which yesterday was generally just a profit-taking mechanism to set up for a massive bull run next week. However, if Take Back Friday does not manifest, then we're going to get a U-shaped recovery, of which the downside could possibly last a little bit longer. But like I said to you guys the other day, don't get carried away with the downside of things. This equity market, like I said in yesterday's webinar, we haven't seen the top. This is just an opportunity to get long again in a big way. Now, let me show you some interesting things that took place yesterday that you may have missed. First of all, look at the SVXY. Actually, no, we're not going to go there. We're going to go to the TVIX. Let's start off with the TVIX. For those of you who were with me the longest, you remember what we did during Brexit. You remember the days leading up to Brexit. You remember the trading plan that we had for taking advantage of Brexit. You guys remember how we got long the TVIX and got long the UVXY, and how we were laughing at people who were buying thinking that everything was going to be all good. Do you guys remember what happened with the TVIX and the UVXY? Do you guys recall how during the Brexit, how those markets only moved $3 max topside? Everybody remember that? Who's been with me? Remember when we covered that live? We got a $3 move in the TVIX and the SVXY. And that was on Brexit, folks. Brexit. All right? And even during the election, you got no movement, okay? Even though the Dow fell, 1,000 points and came back, you got $3 out of it. All right? That's how broken these mechanisms have been. Well, do you know that this market, the TVIX, just to show you how what's going on now. That's what you have to ask yourself a question, what's really going on. All right, we had a movement yesterday. Let's see, 25. We ran all it. This market was up almost $10 yesterday. The TVIX ran $10 yesterday. Wow. Did anything happen yesterday? Did a nuke go off somewhere? Nope. Was a president assassinated? Nope. Was a cure for cancer discovered? Nope. But yet this market moved $10. In contrast to that, did anyone see how the SVXY crashed like 30-some dollars yesterday? We fell from 157.44 all the way down to 130.05. Okay? This is not a weekly or a monthly chart. This is a daily chart. Do you see the devastation on this chart? All right? That was like the mother of all shorts. Now, how come we couldn't get movement like this during Brexit or during the election, the U.S. elections? None of that. But now, all of a sudden, you can get this kind of movement. Now, the 3X ETFs and stuff want to start acting like 3X ETFs. You know what I'm saying? So they go from being broken and screwing you to now they want to move and have volatility and move and do like they're designed to do. Very interesting, isn't it? We have this wild, exaggerated move. Yeah, the Dow was only down 300 and some points. That's nothing. I've seen the Dow down 1,200 points intraday. That's nothing. 300 points is nothing. Okay? So we have to ask ourselves, what's going on? What's going on? We have to do that. Okay? Now let me show you why you should not be so concerned about the move. Here we had this gap that was not dealt with. Yesterday we filled that gap. Now this gap here has been dealt with. Time to go back up here now and close this gap and keep moving higher. This is what's going to play out, whether people like it, want to hear it or not. The XIV is just like that NASDAQ I showed you. Here's the gap here that had to be filled. We filled it yesterday. Now we get to go up and take care of this gap back up here and knock out these highs and go up to 100. XIV to 100. That's all I got to say. Now, does not mean we can't fall a little bit more, one more washout. All I'm saying is this thing is about to take out new highs. So when should we get in is the obvious question. We should let the pulse waves get us in. Don't be too hasty. Let the pulse waves get you in. Even if you're not in at the exact bottom, the pulse waves will not fail you. You will get in on the next move. Just be patient and keep putting your tickets in. That's all you got to do. Put those tickets in. Notice how today it did not say go ahead and jump in there. All right. Just be patient and you will be able to get in the market. All right. That's all I got. I wanted to point this out. I wanted to show you guys this. I started to do it last night, but then I was like, nah, let me chill. Let me do what I got to do. It's been busy up in here. So I just wanted to show y'all this. All right. So, and I hope you guys who missed yesterday's webinar were able to watch the video when I uploaded it to YouTube. Hopefully you'll be able to watch that and, you know, get something out of that. Okay. Let's see what's next here. All right. I wanted to point out a few more things we have on the sheet today. If you look at the sheet, we don't have that many rally alerts today. We do have some in the commodities. We got feeder cattle, wheat, live cattle. Dry ships has a rally alert. Coffee futures has a rally alert. And that's pretty much it. We don't have anything really big of note. Oh, your PIO has had a rally alert coming into today. I know you guys remember that huge thing that it did, that big old spike right here. That is not a bad tick. Something went wrong. Something happened here. Some kind of operation happened here, for sure. For shizzle. And then here you are, kind of like just still drifting. It's like this stock became broken. It's trying to get back to where it needs to be, but it's still broken. Today's entry price is not far removed from the market, but just take a note of where it is for those of you that want to be long on this particular stock. Just make a note of it. And I want to pull up something real quick. Let's see. No, this long red bar, that's a good question. No, this bar on the PIO, the question is that long red bar similar to a pointer? The answer is no. This is not a pointer. Even if price does continue to drift down and take this out, this is not a pointer. This is what I call rage of the machines. Okay, this is machinery right here. That's what this is. This is just those algos taking advantage in this market. Basically, when you see bars like this, all right, in commodities they have an excuse, because in contrast, most commodities are illiquid type of markets. Not a lot of shares trade hands. All right, this is a pretty much illiquid market for the most part too. Like on this day here, only 3,775 shares exchange hands. All right, you can't, it's hard to get, to stay above 5,000. Here you got 15,000. On this day here, you got 16,000. Here you got 13. Okay, right here you got 47,000 here. The day before you had 13. So huge run up from here to here as far as shares. But on this day you only had 16,000 shares and you had this much movement. So something nefarious is here. They can't really explain this bar away. You can't say, well, we just had so many orders come in. No, because right here it says 16,000. Back here, you had almost 50,000, and you look at the range on this bar versus this bar. Now, if all these bars represented, let's say 3,000 to 5,000 shares, and then on this day you got 16,000 shares, you can say, okay, yeah, thinly traded market, this can happen. They can't really explain this. All right, Lucy, you'll have some explaining to do. That's what this is. They need to deal with this. I don't know how they're going to deal with it, but they need to explain it. All I know is we got a crash alert, and that crash alert played out. I mean, that's all I can say. I know something nefarious also took place, because on the 11th and the 12th, we had 39s back to back. And technically from the 10th, 11th, and 12th, on the 10th we had a 9. On the 11th and 12th we had 39s. Then it was quiet on the 15th. And then on the 16th we got another crash alert. And then today we got the 9. So robots have been active in this since the 10th of May. Let's see, is the bottom of the red bar to be revisited good support or a bottom? Actually, yes and no. This low is just a little intraday spike below the below the trend line support. This thing is weird because according to this bar here, and this is a daily bar, it shows that the market closed down here. So this bar is not even correct, because if this was the case, it would have closed at the low. But then when you look here, which is that day, that 4-hour chart, it did not. It came right back. Okay? So this is what kinda happened here. They did this, they waited to the close to do this. All right? They waited to the close to do this, basically, is what they're trying to say. It's just a weird, messed up chart. Because on this 4-hour chart, this is 1 p.m. This is 1 p.m. All right, this is a 4-hour chart, and this is 1 p.m. Then you come over here to this next bar, and now you're at 9 a.m. the next day. So what happened is, from this represents up until the close. So they basically ran this down right on the close. All right, and here's this bar right here. This is 4 p.m. This happened on the close. This was all up until 4 o'clock. So it was a nice day up until 4 o'clock. And then bam, this happened on the close. So obviously they had some sell orders, market on close sell orders or something, along with some buy orders. This is just some weirdness. This is what happens when you let robots take over things. And then they brought the market right back up, and then it just drifted. We're just drifting lower now. So this is chicanery, if you ask me. All right, this is chicanery. I don't like it at all, and there's been really no explanation to what's going on here, other than the fact that we picked up, excuse me, on machines coming into play, days leading up to this event. So how do they explain that? And then I got a crash alert, the day before yesterday. And then here we are now taking out the prior day's support and drifting lower. You feel me? So yeah, Skynet for real. So this PIO, man, I'm telling you, it's relatively a quiet market. It really don't do much, but when it does get up and move, and it does have potential to move. I think that's what this is showing you, that this thing has potential to move. Excuse me. So I don't know. Maybe they're getting in, they're starting to get involved. The institutional money is starting to come in and get involved. All I know is I don't like to see bars like that. All right, because it's not really a bad tick, in my opinion. It's something else going on. As far as crash alerts coming in today, you guys know we had a plethora of those. All right, so pretty much everything across the board has, crash alerts. We got it in the NASDAQ and the S&P as well, so it's showing up again. So this leads me to believe, since we lead the market 3 to 5 days out, all right, and you see the market's bouncing today, dead cat bounce, to me that means it's setting up for another test of the lows and leg down. So chances are we're not going to get that V-shaped recovery, meaning we're not going to get a take back Friday tomorrow. To me, even if the market closes green tomorrow, it would have to be powerful for it to be a real take back Friday. All right, or I'm sorry, not for a real take back Friday, but a real V-shaped recovery, meaning that the lows are in. So this is showing me that we get another crash alert, that, you know, the short-term top is there, like I said, but I'm not calling the top. I'm not saying this is a market top. I'm just saying we've reached a short-term top. Another thing, if you look at the NDX and the SPX tickers on your in-play tab, I believe it's on the in-play tab. I have to look and see. But if not, just look at the indices tab. NDX and SPX, you notice something that I was explaining to you the other day. Your entry, your TRS, and your weekly are all the same, basically, especially on the SPX. All right, on the NDX, not so, because your weekly is just a tad bit like a point, or like a point higher, but your SPX most definitely is telling you, it's warning you, as of right now, you got 3 ducks in a row. So that gives further credence to what I was telling you earlier, that the market will reverse and it is going to take out the prior highs and it's going to go rip roaring. So this is an opportunity to get in there and to pimp that. All right, so just be mindful of that. And as you can see too, coming into today, you had an alert of the stops being possibly ran today, and that's exactly what happened. If you look at the futures, the low is 55.50 and a half. I'm sorry, I'm looking at the wrong thing. I'm sorry, the lows on the SPX, which is just the equivalent of the emini S&P, we got 23.44 half. 23.44 half. So the stop was ran. All right, the stop was ran, put in a new low, and then quickly reversed. All right, so that's what you saw. You saw that the stop was going to be ran. All right, so you had an opportunity for a quick short, which netted only a maximum of 10 points, but even still, if you were trading futures and you were sitting at your computer and you're trying to pimp it, then you could have did something with that. So just wanted to point that out too. All right, so with that being said, let's take a look at where we are in the metals. All right, coming into today with gold, you can see that the market still has good momentum locked in on the upside, and we did continue to rally today, and now the market is down slightly. Let's pull that up to see where we are here. You'll notice too on the sheet where your stop is. It's giving you a lot of wiggle room in this market. All right, so the system still likes the long side of this trade right now. And you can see here we have good momentum. We got this ramp coming up right here. So the system still likes this one on the long side. All right, and you do not have any negative momentum indicators coming in. All right, someone has a question. I think I heard you say that you use to design algorithms. Do these bots try to lure you into a certain direction with a design to reverse on you? Or does it watch movement then react to clean, weak hands? Okay, yes. Except for I didn't used to design algorithms. I still do design algorithms. The weekly pulse wave price triggers are a result of said algorithms. I used to be paid on Wall Street to do that. That's what I did. I created systems to trade in the derivatives markets for my clients. And that's That was the birth of what we have now. But to answer your question, the bots don't lure anybody into anything. What happens is, excuse me, as the price action ebbs and flows, as buyers and sellers are coming into the market and being matched and lined up, that's how electronic trading works. That was the birth of Globex. It routes orders and matches buyers and sellers together, blah, blah, blah. What happens is, because the machines now have taken over the human aspect of trading for a lot of these large institutions, what happens is it ends up pushing the markets, excuse me, enforcing certain outcomes along the price ladder. If you look at your market depth for any, anything, I don't care what the stock or futures contract is, you'll see how many orders are setting out lurking at a certain price. I've done tutorials on that as well, and I think you'll find some of those either in the Learning Academy or my YouTube channel under the, I think it's under the tutorial playlist on the YouTube channel. If you don't see it in the Learning Academy. But anyway, where was I? Yeah, so when you look at the price ladder, you'll see how many orders are at certain, are waiting and lurking, if you will, lurking at certain price levels. So what the retail day trader would do is look at the price ladder and look where the majority of the momentum were, or volume, and they would try to piggyback off of that. And what would end up happening is, you try to ride the coattails of Goldman Sachs or somebody, whatever. And what would end up happening was it didn't always play out. And back then it would easily, but now it wouldn't, because you're waiting in line to get filled. And what has happened now is that because the machines are there, and those orders are not human beings but machines, the machines are able and programmed to get in and out, place the orders, cancel the orders, place new orders, buy, sell here, and do all this stuff in a split second. That moves the market, and that moves the price ladder. So that's why if you look at certain tickers, certain stocks and stuff, they're moving so fast, even though the price is not really going that high, but the price ladder, it's moving up and down the price ladder so fast. So many orders are going off, per second. Like you look at the big stocks that are highly traded. So that's what moves it. So it gives the appearance that you're being lured in, or whatever. And yeah, that's how the market does. The market tries to suck in longs during bear traps and suck in shorts. Suck in the longs on the bull traps and suck in the shorts on the bear traps. So yes, that's what that means. You think, oh, the market's topping out, you'll go short and then you get smoked. Or you think the market's bottoming out, you'll get long and then you get smoked. So yeah, and in those respects, the market does appear to lure people in at certain price points. That's why I say today you have to have the algos, man. I don't see how you can outwit them and outdo them without having that piece of armor. I don't see how you can do it. Okay, let's see. I got a question here. One comment on gold breakout of 1263. I can see 1275 to 1280. Let's take a look and see what we got. All right, my analysis really hasn't changed from the beginning of the week. We got this nice ramp here, and yes, 1280, all right, is that price inflection point. So 1280 on the gold is a price inflection point, and yes, that is correct, HK. 1295 would be the 1295 to 1300 is the initial target from this price inflection point of 1280, and that's what you see here on the ramp. That is exactly the case. Yes, and this is a daily chart. Can't see it on the weekly. The weekly is messy because we're in the cumulus cloud of death. But in the daily, as long as price continues to follow the trajectory of the ramps, we're good to go. So you're absolutely correct, HK, in that one. No problem. You're welcome. All right, next question. Is it okay to trade CFDs of the instruments you mentioned instead of the instruments themselves? CFDs? What are you talking about? CFDs. I'm drawing a blank. I'm sorry. Help me out. Margins. What? Contract for difference. I'm still drawing a blank. What are you saying, man? I deal in stocks, commodity futures contracts, forex, options on futures, and options on stocks. Anything other than that, or Bitcoin, I don't know what you're talking about. I'm sorry. I don't follow. CFDs are common to play futures using little deposit. Are you talking about and they are common in Europe and mimic the price of an instrument? Please don't tell me you're talking about those binary options. Please tell me you're not talking about that. Plus 500. Is that you talking about binary options, man? Please don't tell me you're talking about binary options. Are you talking about binary options? Okay. How about to say get out my trading room with that, man. Now I'm not familiar with the CFDs, my man. Do they and you said that is it a futures contract? Is it forex? I mean, break it down for me. Explain. Matter of fact, I turn the mic on. Go ahead and talk, man. You got the floor. I need to learn something. I've seen the CFD acronym before. I just don't know what you're talking about. Break it down for me, man. The mic's open.
Swiss franc. THD, not FD.
All right, speak up a little bit.
Probably talking about the Swiss franc, huh?
All right, yeah, CFDs. Break that down for me. What they look like? How does that move? You said they're popular in Europe. Break it down for me. Is it something that's on the exchange? Holler at me.
These goals bouncing around good again.
Can you hear me? Okay, man, your typing is pretty dope. All right, type it then, and I'll say it out. Oh, thanks. All right, William just put a link in here. All right, let me go ahead and peep that and see what's up. Thanks, William. I'll peep that. Okay, let's see here. What is CFDs, contract for difference? A contract for difference, CFD, is an arrangement made in a futures contract whereby differences in settlement are made through cash payments rather than by the delivery of the physical goods or securities. This is generally an easier method of settlement because both losses and gains are paid in cash. CFDs provide investors with all the benefits of risk of owning a security without actually owning it. Breaking down contract for difference. The CFD is a tradable contract between a client and a broker who are exchanging the difference in the current value of a share, currency, commodity, or index and its value at the contract's end. All right, let's see advantages of a contract for difference. CFDs provide higher leverage than traditional trading. Standard leverage in CFD market is as low as a 2% margin requirement and as high as 20% one. Lower margin requirements mean less capital outlay and greater potential returns. All right, let's see, not bound by limits. All right, investor may open an account for those $1,000. Okay, now I know what you're talking about. Now I know what you're talking about. Okay. All right, I got you. Nah, this is different. Nah, this is different. Thanks for the link though. Nah, I'm gonna break this down for you guys. Okay. I knew I had heard about this before, but I was like, what in the world are you talking about? Okay. All right. You're right. It is very popular in Europe. Okay, and you're right. It is like on a it does trade like a futures contract, and it is but, all right. How do I say this fast so that my American people can understand? All right, yeah, I had a client once who was overseas, and he had an account with this forex broker per se, whatever. And what happened is everything was on the forex platform. It was on that I can't think of the name. What is that platform everybody uses? It'll come to me anyway. No, FXCM is a broker. This is a platform, but um, MetaTrader. Yeah, it was on a MetaTrader platform. Yes, and what will happen is you go in. I was looking at the forex currency stuff, and then I started seeing other things. I saw the S&P. I saw the Dow futures. I saw crude oil, and I saw all this other stuff. And I was like, "Yo, what's this?" And what they allowed to do in Europe is something they're not allowed to do here. They're allowed to take the data feed, the real-time data feeds and stuff from the exchange, but they're not your trades aren't being executed to the exchange like they are here in the States. They're being placed through the broker's trading platform, just like at ONA or most of the forex brokers. So you're right; it's a contract for difference. It's not anything being settled in cash because your orders are not being sent to the exchange. It's a bucket shop. For those of you that don't know, most forex brokers and trading platforms are bucket shops. Your orders are never being routed to the quote unquote market. It's being traded in house through like a game system or like what's the word I'm looking for? A simulator, if you will. That's the best way to break it down. Okay, so yes, there's a chance you could be betting against the bucket shop, blah, blah, blah. Yes, that is absolutely the case. And therefore, it is different. Now, yes, the pulse waves do work on that, but I have to be honest with you and tell you the truth. Because of the way the broker's platform runs, I have to get data from that broker instead of getting it from the exchange. And I have to manually go in and I would have to create something for each one of the things that I would be looking to trade. Okay? And the reason why that's the only way to beat the broker is to get his data, is to use his data. The reason why you need to do that, if you guys don't recall, I did a video a while back about how to trade on ONA's platform. Well, that's how you have to do it, because they don't charge you a commission. They make their money on the spread. That's why they can offer you leverage and stuff like that. So you have to know what their data is in order to beat them at their own game. And that's how I pull it. So I would literally have to go in each day and get their open, high, low, and close, create a sheet and all that stuff, and create a separate profile for that, import the information to the system, and do that every day just to trade. So like if I'm going to trade crude oil futures, I can use what I already got in my system, the data I get from the exchange, and pimp that out, no problem. But trading there is going to be different, and the prices will be different. Most of the time their high is going to be higher than the exchange, or it could even be lower, or it could be, and their low is usually going to be lower than the exchange. All right, because they have to make money, and you got to figure out what their order entry method is, because they're going to get you on the execution of your trades. For example, if they don't allow you to control your trade like ONA does, you're going to lose every time. Because what happens is the market doesn't have to trade at the high of the day in order to fill you long. Remember, they get you on those spreads, and those spreads widen at the lower points of the day, meaning when there's not as much activity, that's when the spreads widen. Like at night, they widen real big, and then during the day, they're a lot smaller. So you got to look at each broker's different. Some broker spreads are way larger, and then you have to, they have to allow you to be able to pimp that and say, like, for instance, if you want to buy the breakout of crude oil, like you only want to buy it if it breaks out to $50.50. Well, if their spread is too wide, what will happen is they'll say the high of the day is $50.70, fill you at the 50.50, or even slip you to the 50.70, and then the market falls down to $47, and you're like, oh my God, you know what I'm saying? And then you look at their bars, you know, their candlestick charts, whatever, and see that the price never actually traded there, but the spread was so wide, the spread got you there. For those that don't know what I'm talking about, peep my video on how to trade O&A's platform. It's on YouTube. I'm telling you. So, yeah, I'm not set up to do CFDs, basically, unless I'm doing it for myself or for a client, and I have to literally go in there and pull the data every day and build a thing. It's a hassle. It's a hassle. I'm not gonna front you. Only because of how the brokers are set up and because they are CFDs. On the flip side, I think they're wonderful because you could they let you trade. Like there was this one firm in Europe. It was many years ago. I don't even know the name of it, but they traded all the commodity futures, all the forex, and everything. And yeah, you could open an account for jelly beans, and they will let you have 400, 400 to 1 leverage, which was slick. That was dope. So yeah, you guys have some awesome setups. If and if you're able to take advantage of it, then that will work. Only thing I can say is because each broker is they vary. You could play around with it. If they let you have a demo account, go ahead and demo, and then see how far removed their pricing schematic is from the data on my sheet. And if it's pretty much in the ballpark and of alignment, then by all means you can use that. You can use the pulse waves and you can trade it like that. But if it's too wild or far removed, then you got your answer. You ain't gonna be able to trade it. I know that was a long, drawn out answer to your question, but hopefully I answered your question. All right, let's see. Next question. I had a question on the GBTC Bitcoin ETF. On the sheet, it says entry is and to sell it short. However, it is setting there. Why not buy it and ride it up? Okay. First of all, let me pull that up so we can be on the same page. All right. Boom. All right, let's pull up the chart too, so we can all be on the same page. GBTC. Okay, everybody can see the chart. It's all set up. Here's your 1 hour. Here's your 4 hour. These two are your intraday. This is your weekly, and this is your daily. All right. So the question is, why not go ahead and buy this pullback today and then ride it back up? Okay. That's a very good question, and it deserves a very good answer. So here we go. If you recall, what you have been learning in the academy is that we don't just buy low and sell high. No. That is an old axiom that is akin to contrary indicator type trading. We do some of that. Sometimes we do buy weakness and sell strength. But in general, no. We buy high and sell higher. we sell low, and then we buy back lower. That's what we do. In a nutshell, in general, that's what we do. That is the classroom answer to your question. All right. Now let me give you the grimy, the real of how to answer that question. We don't. To answer your question, we're not doing that. Basically, what the system is telling you is that that particular stock is not ready to move yet. If the entry price on the system is far removed from the market, then the market ain't ready yet. It's just not ready. Not ready, not ready, not ready. Period. So you are on the sidelines. If you're looking to get short, you are waiting for an entry point. If you're waiting to get long, you're waiting for an entry point. So right now you are doing absolutely nothing today. This market is nowhere near your entry point to sell short or to get long. So you stand aside, or you place tickets and let them work, and place them as open orders and cancel, replace them each day if there's a change. That's it. This ain't hard, man. It's just, that's how I do it. Especially if it's a stock that I like and I might not have time to always, be on top of it. That's why I like go to canceled orders. My order will stand, and then if the new sheet comes out and there's a change in price trigger, I will go ahead and cancel, replace my ticket, and boom, bam. You don't have to worry about, oh man, I'm going to miss a good opportunity to get long. You may not get long at the lowest point, and you may get long at the lowest point. It's just better to let the system map that out for you instead of trying to guess where the bottom is. Because basically, in a nutshell, you are assuming this is the bottom. It may not be the bottom. This may have much further to fall. Looking at the chart, you wouldn't think so. Looking at the chart, you would say, we got good momentum here. We're still trading above that momentum line here, and yeah, we're post-waving negative, but I think the market wants to make a run back up here to at least the 258 handle. So I think I'm going to go long here. I mean, you can be my guest and go ahead and do that. It may pan out. It may not. But for me, I'm a robot, and I just stick to the system. I do what it tells me to do. So that way I don't have to overanalyze anything. And I don't have to worry about getting my face ripped off either. When the market's ready, the market will run. When it's not, we sit on the sidelines. That's just how I do it. Does that answer your question? It's a good question, though. And I will say this, too. I mean, you guys, we're going to do what we do, at the end of the day, because we traders. And, you do what you do. But I will say this, too. You will come to learn in time to trust the system. You will learn that off-sheet trading can be quite costly. It's fun to do from time to time. Just don't go overboard and get yourself hurt. And we're going to do it because we're human beings, and we're going to do it. That's what knack and dry ships are for. Don't hurt yourself. But you will learn in time to trust the system. You can believe that. You will trust and stick to executing the trades on the system. And it's just better for you. A lot of work has gone into it. And it may not make sense to you now, but in time, trust and believe, it will make plenty sense to you. And that's just how it is. I've done all the pain and agony so that you don't have to, so that you can be good money. No, you really can't beat the robots. You can join the robots, but you can't beat them, man. You gotta join them. The only way that you can, beat them, in my professional opinion, is with the pulse waves. Because the pulse waves are the robots. And that's the only way to do it. We outsmart them, and we run their stops. I don't have to worry about them running mine. I'm going to run theirs. We know where their stops are before they do. Everyone is behind us. We are the best kept secret, and I like it that way. I'm not on CNBC and Bloomberg. I'm not being interviewed every 5 minutes, and I like that. No one knows that I exist. I am in the shade. I am in the background, and it is what it is. You know, I do what I do. Why do you think people hate me so much, man? Why do you think I get so much hate on social media, on YouTube and stuff? They hate my guts. People that attempt to do what I do, they can't stand me because I'm in the way. I'm the only dude on YouTube that called for the pullback correction in the market this week. I am the only dude on YouTube that called the cyber attack days in advance. I'm the only dude on YouTube that called the Dow 20 and 21,000. I'm the only dude on YouTube that called the Bitcoin 1500. Where they at? If they so dope, I mean, they on YouTube and CNBC a day, chatting it up, and ain't nothing happening. They know nothing. To quote Jim Cramer, they know nothing. They know nothing. Now, for real though, you guys, you know, this is the real. You know, I keeps it real with y'all. This is what this is, man. I told you, it ain't but a handful of us that do what we do. And we all do it a little bit differently. We're not the same. That's why I got mad respect for my comrades. I don't have too many comrades. There ain't too many people that do what I do, man. I'm just keeping it real with you. There's a lot of professional, I call them schools. You know, they'll educate you so you can pass a Series 7. But as far as trading, nah, man. I told you guys, I only know of 2 other traders on YouTube that really trade, all right, for real. I only know of 1 other person on YouTube that literally has a securities license, that literally worked on Wall Street, that literally still trades and do what I do, but we do it differently. And that's my boy Oscar. That's it. I don't know nobody else that do what we do. There's a lot of pretenders that pretend to do what we do, but they don't do what we do. The proof is in the pudding. That's all I gotta say. Where is this? Where are they at? I don't see them doing nothing. Anybody can try to predict or call the market after the fact. That's easy. What do I think of Max Kaiser? I think Max Kaiser is an excellent journalist. He's a great journalist, very entertaining, but he ain't no trader. Traders trade, man. We're not in front of the camera all day. It's not what we do. I'm just keeping it real. It's not what we do. We're not in the camera. I don't have time to be putting on a suit and reporting on nonsense, you know, and I'm just saying. I talk about markets and things that relate to the markets that we are trading so that we can make some coins. I don't have time for all the other stuff. But no, he's a great journalist. I take my hat off to him, you know. Great journalist. It's a lot of great journalists on YouTube. There's a lot of great journalists pretending to be traders on YouTube, but they're just great journalists. You know, some of them, I'm in awe of the information pieces that they put out. But as far as market stuff, it seems like everybody and their mother is trying to get into this space. You know, I'm like, stay in your lane. You are a physician. You are an herbologist. You are an alternative medicine physician. Why don't you stick with that? Stop trying to talk about these markets. You know nothing about these markets. You don't manage money. You don't trade. You never had a securities license. You know nothing. How many people have you made money? Nobody. I'm just saying, at the end of the day, that's what it's about. You know, I'm not successful unless I make you guys successful. If you know what I'm saying, if you can't make nobody money, then what Why are you in this space? You don't need to be in this space if you can't make people money, man. I mean, come on. And I'm just keeping it real. You know, if you're not doing that, then you're a journalist. It's just that simple. How many people on YouTube have you seen that claim to be traders show real-time trading, live webinar where they're trading a real market with real money and making money right before your eyes? How many times can you say you've seen that on YouTube? Anybody? Right? You haven't. You haven't until you came here. You saw me do it. You know what I'm saying? Exactly. Exactly. Jeremy just put it. He said, I remember last September, everyone said crash, but you. Exactly. Yep. This bull market I called like 6 years ago with the late great Charlie McGrath. Straight up. Now I will say this. Oscar was the first person to go on live television. He was on CNBC, and he called the S&P going to like 1,600 or something like that. And everybody thought he was a fool. He got a lot of hate mail. And then when it happened, they were like, okay, well, you know what I'm saying? So, like I said, I don't know nobody that do what I do, man. I'm just keeping it real. Why do you think me and Oscar get a lot of shade thrown at us? And we have the most trolls when we do videos. I mean, I get a thumbs down on a video no matter what I say. I noticed that. Even when I called when I called the cyber thing, I got a thumbs down on that video. So we got our haters, man. We got haters. They're gonna come. They're gonna hate. People gonna hate because they not us and they can't be us, but they want to be. Who gives a darn? So anyway, at the end of the day, folks, you know, like I said, there's a lot of bright, intelligent people on YouTube. You know what I'm saying? I have like 1,000 subscriptions, so I'm subscribed to just about everybody on YouTube. But they don't do what we do. Don't get it twisted. They do not trade. They may be analysts, they may be journalists, but they are not traders. I have yet to see them do a live webinar inviting every Tom, Dick, and Harry out there for free and say, come watch this trade real quick. I'm the only one that's done it. That's all I got to say. And done it with success, showing you the money. I don't see them doing that. So if they was that tight, then they would be able to show you something. But they're not showing you nothing. And another thing too, I don't take down none of my videos. Win, lose, or draw, all my videos are still on YouTube. Going all the way back from when I first started doing videos. I delete nothing. All right, so I can't say that for everybody else. I know for a fact I've seen people say some bonehead stuff, then you go back and they done removed a whole month's worth of videos. Just saying. Anyway, let me stop. As you can see right now, if you look to the left side of the screen, the NASDAQ 100 futures, man, is up almost 50 points. And that's not a big deal. I just want to put that out there. It's not a big deal. I think we still got more downside, a little bit more correction, a little bit more profit taking. Think about it. If the NASDAQ was down like 150 points yesterday and it's only up 50 today, it's only a third. You should have got a stronger bounce than that if we were done. So I don't think we're done. That's just my opinion. Also, the Dow is only up 38 points. The Dow futures, come on. That's weak compared to being down 330 yesterday. So that's pretty pathetic. So we're not done selling. And they want to blame everything on the whole Trump thing. Come on, man. They're gonna make me do another "There Is No Collapse" video series. So from this one, I'm gonna have to call it. Well, I don't know what I would call it. There is no economy, or maybe there is no Constitution, or there is no America. There is no United States. I don't know, because basically it's not. We don't have it. Can I add Sherman-Williams ticker SHW to the sheet? I could have sworn I already have. Let me see. It should be under the big old daily sheet. Let me just double check. I could be wrong. Let me double check. Could have sworn I did. Let me see. SHW. Sherman-Williams. I remember the commercials. Ask Sherman-Williams. Blah 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 blah. Ask Sherman-Williams. Okay, yep, it's been added. It'll be on there. It'll be on the next joint. Been hearing about collapse for the last 10 years. Ain't gonna happen. More like a correction, a move into all digital currencies and markets. Yeah, I've been saying that for the longest time. If you guys didn't listen to yesterday's video that I uploaded to YouTube, you probably want to listen to it because I go into that. But yeah, basically the Fed has pretty much ditched the dollar and it's going global electronic. You know, I just try to keep it real with y'all, man. Seriously, I mean, if I don't keep it real with you, who is? Goodness, somebody got to be out here telling the truth. But see, that's why I like to stay under the radar. You know, I can say what I want to say, do what I want to do, and I can still leave my house and, you know, and go shopping. I like that. I never wanted to be famous, ever. I never wanted my face and my name in lights, ever. I could have easily done that. I used to be in show business. I could have easily done that. But nope. I chose not to. I chose to go a different lane. And I'm glad I went this lane. I'm glad I left entertainment. So, nah, I realized it wasn't for me, man. It's not what I wanted. I like being in the shadows. Plus, it's easier to move when you're in the shadows because people don't see you coming. They don't see you lurking and hiding. You know what I'm saying? So, I love it. You know, I love it. Love it. I love it. I love it. That was from one of the scenes from Saturday Night Live with Cuba Gooding Jr. and I forget the chick who did the scene with him. They were like a weird couple, and she kept saying, "I love it, I love it, I love it." All right, I'm bugging. Gold's coming back a little bit here. I see it. It's up. It's only down 560. Nat gas is hanging in there. It's unchanged now, but you see where we didn't break that 316. We're at 319 now after hitting 324. So it's just hanging there. It's building that 315 base that I was talking about. So it's chilling. Not time to add to the position yet. I thought I was going to get an opportunity to add when it broke 340, but then it quickly retreated from there. So I'm still watching that nat gas. Nat gas is going to be going the way of gold and silver before long. You watch. It's going to be crazy. And people going to be talking about it. Ooh, you see nat gas? Ooh, 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 ooh. I'm telling you, they're going to be tripping. But a lot of people ain't going to be able to catch this stuff because it's going to be moving too fast for them. They ain't going to know what to do with it. All right, any more questions? Any more questions? Nat gas right now, here we are. We over here. It's unchanged. It's at 319. We hit 316. Let me pull up the chart for you so you can see it. It's just all over the place, but for the most part, you know, we're flat. We so far we've lost this momentum barely. We need a 323 close this week, and then we can still have the momentum locked in. Look at this weekly ramp. Look at the ramp. Look at this, man. You know where we going. I'm telling you, we going to 350. That's all I gotta say. We're going to 350, and we still got the support around the 315 level. All right, so a little waffling. On the daily, it's just, you know, sideways. Well, in this weekly, you about to jump and skip. All right, anybody else? Last year, nat gas ran up huge from end of May to the end of June. Maybe a repeat. That's what I'm seeing. That's what this ramp would suggest. This ramp is at least a month out, right? So that's what I'm seeing right here. I hope so too. However, if I'm incorrect, then it looks like D gas will be where is that? You know what I'm saying? And from my favorite movie, or one of my favorite movies, The Count of Monte Cristo, when he gave him an ultimatum and said, "You join us or die," he said, "You know what? Looks like the life of a pirate is for me." So if U gas fails me, then I guess D gas is the security for me. And right now, D gas is still struggling. It got close today. We got real close from getting triggered long. So we'll see. Is it worth considering 22K Dow September call options? No. No, because of the decline we had yesterday and for the fact that we can't even get a close above 2100. So no. Nope, 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 nope. When the time is right, you're going to have to bite the bullet, go long the Dow futures, or get into ticker DIA, which is the Dow ETF. All right. I know it's expensive. I know it's expensive, but that's what you got to do. You got to do what you got to do. All right. Depending on your pockets, there's a couple ways you can play it when the time is right. Once the Dow, takes back off and we put a bottom in and into the correction, then you can get long the call the call option at the market price. All right, you can buy a couple calls that way. It'll be a little bit cheaper than buying 100 shares at $200 a share. Or you can get long the Dow futures. The margin on there is relatively small in comparison. All right. Or if you don't have the pockets to do either one, you can always trade what I call the poor man's stock index futures. I will type it in the room here. There you go, baby. And you can do that with a micro FX account. All right. For all of you who want to participate in the Dow, S&P, NASDAQ, Russell, but don't have the coins, there you go. All right. You have abilities here. You got abilities. You can still participate. What I just typed in the trading room there mimics the stock indexes just like this does. That ETF right there. All right. So you good. All right. For those of you who can't see what I just typed, the Euro Yen or the XIV as in Victor. We've talked about it before. Okay. Now, speaking of the XIV as in Victor, you see it's come back $2 today after it fell down mad money yesterday. All right. And I think was it Bonnie that was with us yesterday was talking about how she saw this 67 to 69-ish gap to be filled. Let's take a look. Yep, she brought this to my attention. All right, so here we go. We did fill this gap down here. And I said we'll go around 67 or 68, I think I said. Isn't that what I said? I said like 67 even or something like that. And the low yesterday was 67.48. See what I'm saying? And then here we go. So this could be the bottom. You see this flat consolidated thin cloud though. So we could chop and do anything. All right, but I think the market's gonna continue to go down a little bit. Then it's gonna shoot, or we can just consolidate in this too, and then boom. So that's how I'm seeing it right now. All right. Any other questions? I just realized something. HK, you burning the midnight oil, ain't you? You still with us this late? You got insomnia, man? It's all good. All right, so everybody's good, right? Any other questions or anything y'all? Is anything y'all need me to cover? I failed to ask to say that. Is there anything I need to cover as far as the utilizing the pulse waves or anything like that? Anything y'all not clear on or just had a question? I mean, hit me up. Let me know. Oh, real quick too. FYI, please do not send me questions or personal messages to the main email account. Send it to this one. I'm typing it in the room. You can send me the instant messages via the trading room, or if you're going to email me something, email it to that email address right there. All right, because that's how I know it's coming from the trading room. If you send it to my other email address, I probably won't see that joint for 24 hours. You know what I'm saying? So if you need to hear back from me quicker, use that one. Okay, just hit me up that way, and it's all good. All right, anybody else? Yeah, H.K. Williams does give good advice. That's one of our moderators in the room right there. Been with me a long time. Yep. Especially when I'm not around, y'all got questions. He knows the system. He can break it down for you. Him and a couple other. It's quite a few people in there that's pretty versed with the system. I know Ross. Ross is another resident expert in the room. Yep. He knows it like the back of his hand. Yeah, and Bill. Yep. Yeah, that dollar index, man, it's in the 97 handle. You know, I mean, we did say that was going to happen. The U.S. dollar index is been under pressure. But did y'all see this right here? You see where we are with the index, right? We're up just a tick or two. And you come down here, you see your euro is off, just slightly, but then you got your pound and your Aussie are up. And the Aussie's catching a bit, even though gold is coming off a bit. So that's rather interesting. And you see look how powerful your bonds got, you guys. 154. What did I tell you? People on YouTube, tomorrow bonds are gonna crash. They're gonna collapse. These bonds are, oh my goodness, China is dumping the bond. China this, China that. And you know what I said to all of that? Shut up. You don't know what you're talking about. Ain't no rate hike as long as this keeps happening, folks. The next rate hike is off the table. You don't even hear them talking about that on the news. Ain't no rate hike as long as this is happening and going following this ramp on its way to 155. No rate hike anytime soon. Definitely not in June the way this thing is moving. Look at this. Look at your weekly. First resistance is 155, and then when we get up to the ramp, you got a few more. You got some pressure once you get up to the ramp. You do come under pressure, but it can easily consolidate and then pop back up again. So I don't know. This is not a rate hike anytime soon, folks. Just wanted to put that out there for you. All right, in case you've been hearing otherwise. You cannot hike rates like this. Yields are dropping right now, not rising. All right? Bond yields are falling. They're falling through the floor today. All right, falling through the floor. Interest rates are coming down. They're crashing through the floor. Once again, interest rates are crashing. If you're buying a house today, you float your interest rate because they are crashing through the floor. You don't even have to lock in a rate today. They're crashing through the floor. All right? You can't make this stuff up. You can't make this stuff up. It is what it is, people. Just wanted to throw that out there, too, for those of you who may be in the housing game. You can let that rate float today. You ain't got to lock in right now. At this rate, I think interest rates are going to go even lower. 30-year fixed rate should be falling through the floor. There you go. All right, anybody else? Anything else? Do we got anything else? Nope. Okay. Well, with that being said, I will see y'all in the trading room then. All right, that's what's up. William, I know you didn't drink like a gallon of coffee. I don't think I ever seen you this late. I'm tripping. Good night, man. Get some sleep, dude. Love you, my brother. All right, peoples. I'll see you on the trading room. Peace.